Roundhill tweeted that MSTW is coming soon, and I wanted to make a video to cover this one. This is pretty exciting because obviously MSTY is one of the favorite ETFs from YieldMax. Roundhill is basically coming with a direct competitor with YieldMax favorite and best performing ETF. I wanted to and I had to make a video to cover this and kind of give my take on this one and inform you guys and educate you guys on what could possibly be the difference between MSTW and MSTY. Are these two different holdings that it's either one of them, or could you potentially hold both of them in the same portfolio? MSTW could serve a different purpose than maybe MSTY in your portfolio. So I just wanted to make a video to cover this fund that is basically coming soon from Roundhill. Obviously the main difference is this one is going to be weekly in comparison to MSTY, which pays monthly distributions. Essentially in this video I'll be talking about what you can expect from MSTW, the differences between MSTW and MSTY. I don't know exactly how MSTW is going to work because it's not out yet. Based on their other weekly paying ETFs, it's kind of easy to kind of guess how this one is going to work because all of their weekly ETFs from Roundhill are working in the same way. Under the shell, essentially, there's little differences which I'm going to talk about. Then I'm going to compare the potential of MSTW with MSTY, probably give you guys my opinion and what I think. Before I start diving into MSTW, I just wanted to quickly thanks everyone who's subscribing and supporting me. Like I said in my other videos, it's just crazy to see the support and the growth recently in my channel. So just thank you so much everyone for the support, and let me know in the comments what you guys think and suggest any ideas. Alright, so what is MSTW? To understand what MSTW will be, you can go on Roundhill's website and look at all of their weekly pay ETFs, and they're essentially all of the same thing. So if you see here on the tweet, they say that it will be MSTR with enhanced exposure and weekly distributions. For the sake of the video, let's take Apple as an example. So Apple here is the same thing. AAPW, it says seeks weekly distributions while targeting enhanced returns corresponding to 120% of Apple's weekly performance. So what does that mean? Does that mean that this is leverage and you're going to have higher distributions that if you hold a YieldMax version of Apple? Is that what it means? Or is that not what it means? It means that it's going to be more volatile because they're leverage. Here, as you can see, the latest distribution was 106%, and I'm going to explain to you why. So what is AAPW? And you can expect the same thing from MSTW. So it's going to be weekly distributions, obviously, enhanced exposure, and a powerful combination. So basically, you're going to have exposure to the actual stock on top of receiving income, which means that you can capture some distributions and you can also participate in a bull market for whatever the underlying is. In this case, Apple. In the other case of MSTW, if MSTR goes up a lot, you're going to be able to capture that because you're going to actually hold MSTR inside MSTW. So as you can see, very different from a holdings page from YieldMax. Here there's only two holdings, and like they're saying at the top of the page, the sum of their weighting is going to be 120%. You have access to an exposure of 20% of the actual stock, and then you have 100% of an Apple weekly swap. So what is a weekly swap? If you look at NVIDIA, top holding, same thing, 20% and 100% of a weekly swap. This is the biggest difference between MSTW and MSTY. Let's look at MSTY. MSTY is holding, as you can see, they're very transparent. You can see that they're holding cash as a collateral, and they have treasury bonds, treasury bills, whatever, and they have their covered calls on MSTR here. So here you can see the actual covered call with the expiration date. If you really wanted to, you can copy paste whatever they're doing on MSTY every single day. So here they have a call for a strike price of $390. And the current price is $434. So this is deep in the money. And yeah, essentially, if you go on Misty's page, you can see on a daily basis what they're trading and how they're trading and what decisions they're making. They're showing everything on this page, where here they're paying yield and they're not directly trading options, and all that you can see is that they have a weekly swap. So what is a swap? What is the difference between a swap and actually trading options directly from YieldMax? So YieldMax, what they do here, okay, YieldMax, what they do is they actually trade covered calls. So they trade options or whatever, covered call, any other option strategy that they're allowed to trade in the fund. And who's trading that? Take a guess. It's YieldMax themselves. They have their own traders, their own managers who manage the trades, take decisions on whatever they think it's the best thing to do. They actually hold MSTR. They sell the calls. They decide and they do what they want with the option plays. Whatever they do, it gets updated on the holding page. Roundhill, okay, what they do is for example, this is what MSTW is going to look like based on all the other funds. Maybe they're going to make it different, but pretty much 99% chance that MSTW is going to be the same as all of their weekly paying ETFs. So MSTW is going to be 100% of a swap and 20% of MSTR. This is what we're going to be seeing on the holdings of MSTW, the weekly swap. And this is the stock, like just the same as you holding shares in your brokerage page, for a total weighting of 120%. Cool. So basically here, this will allow you to capture upside. So if MSTR goes super high, MSTW is going to move in the same way. If MSTR crashes, MSTW is going to crash. YieldMax, okay, they don't actually hold the stock directly, and they're selling very deep in the money calls, which means that they're really prioritizing income. If MSTR moves high, obviously they're selling covered calls, so their strategies are bullish. You probably don't have as much exposure to an upside, and I think I actually have that pulled up. So as you can see, MSTR in the past month went up 13.5%, and if you compare that to MSTY, in the past month you've only gained 4% in share price. This is not total returns because MSTY also pays big distributions, but just to look at the growth side, MSTY doesn't offer as much exposure to a bull market. This is the main difference, is that in basically any scenario, MSTW has greater exposure to the actual underlying, so you will be able to capture a bull market or upside. Let me just show you an example. For example, Apple in the last month, I know this is Apple, this is AAPW, right? Oops. So Apple in the last month is up 7%, 7.5% for the actual stock. AAPW is up 7% as well. The way AAPW works from Roundhill is that this is influenced by the 20% holding of Apple plus the performance of the weekly swap. This is probably how they calculate the share price. Just to explain what is a swap. So a swap is essentially a black box. A black box is, where is it? This is a black box. So this is YieldMax, this is a black box, and this is the income that the investors receive. So essentially a black box is a system where you give an input and you don't know what's happening inside, and you get an output. So what's happening here, let's just take the swap for example. So when you hold MSTW, how do they pay distributions to their investors? The distributions are coming from the swap. Essentially, the swap is an agreement with Roundhill and a firm. That could be a big bank, that could be a hedge fund, and that could be a firm. They have an agreement and they basically relay all the trading to the firm. So here, for the sake of the video, let's say it's firm A, but it could be any firm. We have no idea what it is. That's something private. I don't think they share that. And the firm actually trades options depending on the performance of the market, the underlying, like if the IV is high, if the stock moves up, moves down, they're going to be able to generate a certain type of income. I don't know if they do it on a daily basis or on a weekly basis. They send back their distribution to Roundhill, and then Roundhill decides what they want to do with the distributions. I'm pretty sure that they pay out everything to their investors, and they probably keep a portion of that swap to also affect the share price of MSTW. So that is the biggest difference between MSTW and MSTY. MSTW, you will be able to have more upside, more downside. You'll be able to capture more of a bull market. When you hold MSTW, the movement of your share price is going to be much closer to the underlying than if you hold MSTY. So that is good for an investor seeking income as well as growth, where MSTY from YieldMax, as we know, YieldMax is all about maximizing income and giving the investor the freedom to do whatever they want with their income. If you invest in a YieldMax ETF, it's probably because you want income, you want to have the freedom to do whatever you want with the gains. You don't necessarily want the gains to be in the share price, but you want the gains to be in cash in your account. And then it's up to you to reinvest it and buy more shares, buy something else, or use the distributions if you're retired or if it's something that you want to do. What is my personal opinion on MSTW versus MSTY? So what is my opinion on MSTW? Honestly, I'm very excited for this one. Based on the performance of their other ones, they've been doing pretty well. Whatever swap agreement they have, they're doing a good job. As we saw from Apple, they're paying decent distribution on a weekly basis. And the last distribution for Apple was 100%. This is not constant. The Roundhill just shows the latest distribution here. It's not the actual real distribution average. If you look at their distribution here, all the other ones were essentially, it seems to be like around 20-25 cents, sometimes lower, sometimes higher. On top of that, like I was showing here, you will capture almost as much growth as holding the underlying. So I think that Roundhill is doing a very good job at offering weekly income and participation to a bull market and exposure to the underlying future growth, so share appreciation. Do I think that MSTW is going to be better than MSTY, or do I think that MSTY is going to remain the king? I don't know, that's something we'll have to see. Personally, I believe in MSTY, and MSTY has been crazy, and it's been the best YieldMax ETF that proved everyone wrong, that you can have crazy yield, you can sustain that yield, and you can basically have house money. MSTY basically kind of shook the world and convinced everyone that income investing is actually a real thing and you can make a lot of money with that. I think that you can actually hold MSTW and MSTY in your portfolio. Why? For enhanced cash flow and exposure to the upside. As we know, like Bitcoin right now is pretty crazy and everyone is excited because Bitcoin is reaching all-time highs all the time. I think that if you hold purely MSTY and you want more exposure to basically Bitcoin, and you think that MSTR is going to keep growing over the years and the share price is going to keep appreciating, I think that if you go all in on MSTY, you might be missing out on the appreciation. Your goal is to capture the upside and the potential future growth of the Bitcoin and MSTR. I think that MSTW is going to be a very good option. I think that having MSTW is going to allow you to capture more growth to MSTR, as well as enhance your cash flow, because now you're going to have weekly cash flow. But I believe then MSTY, the way they're trading their options, if we look at their holdings, they're doing pretty much deep in the money calls. It's all about generating a lot of incomes. I think that MSTY is still going to be the cash flow beast, but it's just going to be weekly, monthly payments. But MSTW is going to add a little cash flow to your portfolio, and it's going to expose you to the growth of MSTR, like I'm saying. I think they pair well in a portfolio. So personally, if I was a big MSTY fan, I think that I would maybe dabble a little bit into MSTW and see if it could help my portfolio grow its value as well as capture a bit of income on MSTR. Another thing I wanted to add is that, for example, MSTY, yes, it is going to be monthly, but YieldMax is all about income. So we know that they're doing deep in the money calls. As an investor, you have the freedom to go on their holdings page and look at what exactly they're doing. And you can look at the actual price of MSTR right now. You know that they're going to be generating like this much of income, this much of premium. You kind of expect what kind of yield you can get. And you also know that MSTY is very open about their trading, and YieldMax is all about generating income. So when you buy MSTY, you know that the team of traders that are working for YieldMax are going to be doing everything in their capacity to have the highest distribution month after month, and they're going to be doing their best accordingly to the market condition. Where MSTW, you don't have that transparency. All that you know is if you go on their page and you look at the holdings of Apple, for example, they're holding a weekly swap agreement. You don't know what the other firm is doing. Yes, they're doing their best. The weekly swap is a lot more dependent on market conditions. I think that they're trading less aggressive than YieldMax. They're not trading as much for income. As we saw, the price of AAPW is kind of following the price of Apple. So they're probably selling covered calls that are more out of the money or at the money, so they can capture some upside. In the past week, Apple kind of blew up a little bit, the stock. That weekly swap sent more money to Roundhill, and on weeks where Apple is not doing as well, as you can see, the distributions are dropping. So that's a little thing about Roundhill, is it seems like it's more about stock exposure and weekly cash flow. Like if you're an investor, you kind of have two options, or you can pair them in your portfolio if you want to add a bit of growth and weekly cash flow. The thing is, YieldMax is just like they're saying in their name, they're maximizing the yield. Where Roundhill, they're offering weekly distributions, they're offering a nice cash flow, and they're offering potential for growth. If the underlying is performing very well, you will have big distributions. In times where the underlying is not doing as well or is going down, I believe that the way that the weekly swap agreement is trading is not as aggressive. So they might be paying less option premium back to Roundhill. On the other weeks, we saw decreasing distributions, and now this week, all of a sudden, Apple kind of blew up because probably there was some good news, and now we got a big distribution. So that is a key difference between how Roundhill and YieldMax pay their distributions and how they kind of handle their trading. So yeah, guys, that was my take on the coming soon MSTW from Roundhill. Let me know what you guys think. Like, hopefully you learn a little bit. I thought it's pretty cool that they're using swap agreements compared to YieldMax. That's the biggest difference between Roundhill and YieldMax, and that's probably how Roundhill is able to pump all of these funds is since they have swap agreements, they probably don't have to trade themselves, and it's easier to open new funds for them and probably catch up to YieldMax, who have so many funds already. Anyways guys, I hope you guys enjoyed the video, and until next time, take care.